Hello and welcome to RANsquawk's morning briefing for Thursday the 18th of February 2010. T-notes remain pretty subdued overnight. The Asian session volume still somewhat impeded by the Chinese holidays that we've had for Lunar New Year. And remaining down, having seen downtick at the pick close yesterday, where we finished down around 20.5 ticks or so for Treasuries, having seen the FOMC and latest various officials in the US commenting on their various strategies for exit in terms of stimulative policies. Bond futures, they've also followed a downward trend this morning. Quite a lot of supply in terms of European issuance. We've had around 8 billion euros worth out of France in various length in VTAN maturities. And we've also had Spanish auctions to the tune of around 1 billion as well this morning. Also weighing on fixed income has been stronger equities. We're up around 0.5% now in the FTSE, CAC and DAX, being driven by several good earnings reports we've seen out of Switzerland, ABB with good numbers, likes of BAE Systems as well, and the FTSE posting some decent earnings reports pre-market today. On the flip side though, one individual stock I would like to focus on was Daimler. Their shares did drop around 9% during the session. They reported their full year and Q4 numbers around 9 o'clock London time this morning. They were a lot worse than expected. They made a big loss, around 2 billion euros worth for the full year. And then as well, they have made a cancellation or recommended to their board that they should cancel the 2009 dividend. As mentioned, their shares spiked lower around 9% on those comments and dragged some of the other, particularly German car makers, lower. Daimler shares have recovered but still trading down to around 7% at last check. Elsewhere, in terms of economic data, quite a lot of things from the UK focused very much on the public finance numbers. Public sector net borrowing did increase, as well as mortgage approvals was quite a bit weaker than expected, which has weighed on the pound this morning. At the time of the release, or post that release, cable was down around 100 pips and below the 156 handle. Has recovered somewhat as we head towards the US Open. Take a look in terms of what's to come from the US then. We've got the weekly jobless numbers. We've also got PPI and or Philly Fed, as well as leading indicators, and then from US Treasury we're looking out for the announcement of the sizes of the 30-year tips, and if I refer to my sheet for the Treasury sizes on the auctions to be announced, the 2, 5 and 7-year note refunding, that'll be at 4 o'clock, so that'll be 10 o'clock in Chicago.